early on, so I think it's best to just avoid it altogether. Same thing with news at 10 a.m. Those two are very low probability, I think, for AM sessions. You can look at 10:30, 10:45. Occasionally it does play out on Mondays, but you also need clean market structure for it to actually look like we want that 10:30 signatures, right? Either turtle soup or a market maker model, something like that at 10:30. So we're steadily climbing up here, respecting the bullish order blocks. All in here. We got a propulsion block right up here, right? So down closing range, closed above it. Or next down closing range that approaches or closes into a previous order block would be your propulsion block. So you can see once we close above it, we tapped into it aggressively, closing above mean threshold and shooting off. So watch this daily buy set appear at 16,410. So I'm going to screenshot this to predictions chat. Did ICT ask us to look for open interest for which contracts? Yeah, it's open interest and volume. So if you go to barchart.com and then type in the different contract expiration dates, it'll show how much volume. So I think NQZ has something like 70K volume this morning when I checked, and NQH had 85K. So it's not crazy different, but still enough to switch. All right, it should be open now. Hold up. There we go. Sorry, it was, I think at the stage was full. So let me just make sure that this is maxed out now. All right, there we go. Hopefully it should be fine now. Here's the macro. So we'll just be watching. I'm looking at 1010. That's kind of the sweet spot I want to watch for Mondays. How do you handle the misaligned data when we roll to an NQH weekly time frame NQZ? We haven't taken ETH buy side, but an NQH it shows we did. Let me see. So here's the daily on NQH. Let's go to NQZ. So is that the November 29th high? No, we're still below it. Right, here's the November 29th high. We're still below. It's not super different. At least from what I'm seeing. I don't see, oh, the weekly chart. Let me see. So we're close to it. If there is discrepancies, I would just say don't worry about it. Just look at the current contract. You don't really have to use the past data. So if it's something like this where it's the weekly charts aren't super aligned, just use the current contract because there's going to be more people looking at this then there's going to be more volume, right? There's going to be more open interest liquidity all on this one than the other one. So we're still holding this order block. I'm watching for CISD. If we want to close below this closing candle here, potential. We may want to trade back lower. We don't have any gaps in the 1. Pretty efficient delivery. So if we were to reverse AM low, obviously we have some sell side down here too. But I mean, like if high probability day, this would be quick speed, right? We only have maybe the swing low, we cause a reversal or retracement, but efficient delivery all in here, no imbalances. So watch if we can close below this up closing candle. I'm watching this range and then this range. So 2 order blocks are kind of bouncing in between. I prefer usually to use NQ1 exclamation point, which always shows the current contract. Yeah, you can use that, but the only difference that I don't like is sometimes with NQ exclamation point, it doesn't show volume bounces and regular fair value gaps as much as the current contract does. And also the prices are slightly different, which doesn't matter technically, but volume bounces are very important, right, when you're looking at price. Same with regular imbalances. So if we look at regular NQ, it's not going to be too different, but sometimes there are either more volume bounces on NQ exclamation point or there's discrepancies in price. And IC just teaches to use the current contract anyways, so I'll follow his rules on that. It's trading up. Watch this order block now. Hmm. Sorry, I'm just trying to fix this so it's not maxed out. I think I have to boost the server. There we go. Okay, now should be all good. I hope. Alright, there we go. Excuse me. Should be good now? Yeah, okay, perfect. I apologize if it took a bit longer. You didn't miss anything. It's just Monday price action, so nothing really that important. We are trading back lower, but you can see, right, in this 950 macro, we haven't really seen any we haven't seen any Judas swing. So preferably between 945 and 10, if we're consolidating, you'd like to see a Judas swing on in this macro here, which preferably would be, since we're kind of consolidating up here, I'd like to see a Judas swing up here, change in state, and then we actually could dump all the way to the sell side. Morning. But on a low probability day like this, I don't think it would play out. So we're going to be watching 10-10. I do suggest, though, if you have access to previous screenshots and backtesting data, and you have screenshots of specifically Mondays, if you want to group those together and then study them, I think you'll find great benefit in that, because it's kind of like a separate entity in itself that needs to be studying because it's such a low probability day. Okay, so we just took out the short-term buy side here, right? So I'm watching to see if that's a turtle soup, and then we have a potential CISD off of this order block range up here. Okay, so we just tapped into it and closed below. I'm watching this range. Okay, if we start displacing through that, then look for all of the old selling points in here to be used as old selling, inversion order blocks, things like that, and you'd be targeting down here. Obviously more sell side over here. I am interested in this one because I think we're relatively equal to Asian. Yeah, so sell side down here as well. Not confident we'll hit it, but I mean for so far it looks like we're closing below. So I guess this might be a turtle soup up here. I'll screenshot this, send it to predictions chat really quick. So we just closed below the CISD, and now watch this tiny sibi right in here. New week opening gap is lower, so keep mindful of that. It's right around here. Watch we hold this sibi. If we just tap into it, that's already two PD arrays, right? So we have the inversion, not the inversion, the bearish order block. This for value gap, that's already two. So we'll see how it wants to hold. We're just waking up slightly past it. Watch where the candle body closes. If we close bearishly, that's a good sign. ES tapped London high, but not purged. Yeah, by the tick. And we're already displacing lower. So we definitely have SMT there, right? If you look between London high on ES and London high on NQ, significantly above London high on NQ. So watch the SMT there. It is quite far, but I mean, look at the indices on this, right? Here's DXY in the bottom right, but misaligned, misaligned, misaligned. I'll screenshot this as well, share it to predictions chat. Very, very low probability. It's still good to learn these days, right? You can see we're trading up through past CISD, past the order block now, and past the fair value gap. It's very important to learn these days. I saw something on Twitter last night that a good trading model will teach you when to enter, right? And a great trading model will teach you when to avoid the markets. So you can learn all the ICT concepts, you can learn all the PD arrays, everything's about time. But there's a certain extent where it works and where it doesn't work. These low probability days is where new people are going to try and use them a lot. Here's your potential reversal at 10 a.m. Like that's what you would want to see right at 10, but I don't trust that. You're going to learn all of it. You're going to apply it on these low probability days and get stopped out a lot and not going to understand why. But you could identify the signatures that are showing you should probably avoid the markets. And that's how you protect your capital, right? There's no point in taking a loss on a day that's already estimated to take it from you. So we have inefficient price delivery here. Right, with the sibi, you like to see both up closing and down closing range within the fair value gap. Now, the only reason that this wouldn't be returned to is if it's used as a breakaway. But we don't really see it used as a breakaway as much. So I'd like to see at some point we do see old selling put into this range. That should be ES taking out their high. Yeah, there we go. So ES just swept out London high. Now watch how we want to react. Also relatively equal buy side up here. Still no entry, right? There's nothing in here that you, or at least me, I don't see anything clear. Now, something that I would look at is potentially using this as inversion. If you can tap into it, respect it, then you can look at going long with the inversion. But I still don't like it enough where I would place anything on. Now December, especially this week for sure, but the entire month of December, the entire month of January, really, it's going to be a scalper's market in terms of ICT concepts. So I'm going to be just taking quick 20s, maybe quick 30, closest liquidity grabs is where my exits will be. I'm not really going to expect those large kind of movements just because of how difficult price action is to read and how kind of choppy the time element of these latter months are. Glad I joined, but I'm taking 5 impulsive trades right now. Hey, that's good. Learning some patience. Never go wrong with that. So we're filling this inversion now. Watch how we respond. 20 points. So 20 ticks technically. So if you're not familiar with how futures market work, you have 1 point, which a point is from here. So 16,376 to 16,375.25, right? That's a point. In between there is technically 4 ticks. Okay, you have 2.5, you have 0.5, you have 0.75, 0, 0.25, right? So that's a tick. Each tick on NQ is worth $5, I believe. And then each point is worth 20. Okay, so 20 points would be from 16,376 down to 16,356.25. So these are the kind of ranges I'm looking at. It's nothing crazy, right? 20 points. But that typically when I'm trading my concepts, not my concepts, my model, that's the minimum I'm looking for. 20 points on NQ and 5 points on ES. So if I have like multiple contracts, say I'm going long, so by the way, we're respecting this gap here. Right, we just wicked into it. There's a selling I wanted to see. Watch how we hold it. Still no trade I'm looking at. But if I have multiple contracts on, right, if I was taking a long here, something like that, first contract will come off at 20 points. So right above here. And the next one I'd be looking at maybe 40 points. And then any partials after that is based on market structure. So if I was looking at a short in this case, right, maybe 20 points, and then we have an order block in here within discount, take partial off there, this sell side, I can take partial off there, more sell side, right? So that's kind of the framework I use. But in these later months, taking partials quickly is going to be very important. You're not going to see these 100-point runs. I mean, you can, but it's going to be very difficult to capture them in these months. There you go. Yep. Yeah, 1.20, 20 points, 400 per contract. Now, if you're on the micros, so if you're on MNQ, I can type it. So if you go to MNQ, and you can look through all of these, this is the micro contracts. So you take your mini contract value and divide it by 10. So in this case, 1 point would be worth $2. 20 points would be worth $40. Okay. So if you have a small account, like a small evaluation account, something like that on demo, obviously, this is what you would most likely be using, unless you have a crazy risk management system where you can use NQ, but I would say just use MNQ. So holding the inversion, got the selling I wanted to see, and we're climbing above it. Probably got 20 from there. Yeah. I'm fine with missing out on that one. But you can see the element of time is really misaligned. We don't see any Judah swing. Okay, we failed sweep sell side on 930. Don't have reversal at 940. We have, I guess you could count this as retracement at 10, but it's not really a deep retracement. It's not normal. And we're expanding up. So watch the buy side. You can see I keep flipping from buy side to sell side. That should also show you its low probability. In terms of RR, is that something you are considering when entering a trade, or are you just focusing on the points? I probably will get some heat for this, but I actually don't trade RR at all. It's not something I look at all. I think there's a difference between Forex and futures. Forex RR is very important. Um, I don't think it's as important on when you're trading futures contracts, just because if you have one contract, something like that, right, and you are trying to trade 1 to 2, it's very difficult sometimes to manage your risk properly. Like if I was going long here, my stop would be below here, right? My stop would be below here, which I don't know how many points is that? 23 points. But I would still be taking profit at 20, which I guess technically is a negative R. Um, but when you're confident with your model and confident in your, in it playing out, I'm fine with taking a trade like that. Which, some people are going to be, what the heck, you're taking a negative risk to reward there. But I'm actually comfortable with it because I'm expecting it to play out just based on the market structure, right? And I'd rather have my stop. I mean, you could put a stop here too, technically. But it's not something I look at all. I'll have my stop loss at a appropriate spot, and then my take profit zones will be different each time. So if I have my stop here, right, I'm not going to be looking at, here's the long position. If I have my stop down here, I'm not going to be looking at, okay, if I want a 1 to 2, that's all the way up here. It could reach for this buy side. I'm not saying it can't, but the worst thing you want to see is it starts running in your favor, it goes 25 points, and then reverses. Then I'm going to be like, oh, why didn't I just take the profit there? So yeah, I think at Forex though, if you're looking at trading in Forex, R is very important because you can manage risk like you can keep it tight, right? Like based on your stop loss, you can basically estimate how much you want to risk per trade. If you're using one contract on NQ, it's going to be different how much you're risking per trade. It's based on market structure at the current time. Tape read is an eye opener. Oh, this is low probability, man. Just wait till later in this week. We'll get some killer trades going. Watch this for value gap in here. We also have an order block. So this is a retracement I'm looking at around 1010. I'm assuming this should want to hold. So this is what I was talking about, right? Around 1010, we should see a retracement or reversal. So watch this. We're looking for approximately 20 off this. Maybe up to the buy side, which is pretty close. So 16,410. We'll put a little demo on here. Low probability, so don't take this as a trading signal, but I just want to test out this 1010 idea. See how it goes. Slightly late entry there, but it's fine. So based on what we're seeing, we don't see any Judah swings. I don't know if we want to reverse here, but since we're holding the order block and holding the bisi, I feel somewhat confident in taking it. Stop is tight, below the entire fair value gap low. I don't think we should trace any further than that, but you can see we're already starting to catch some heat. Just targeting 20. It's not something that I would take. This is not a high probability trade. Okay, I just want to see it play out. So it does not mean take this as a signal, nothing like that. First day here, I'm using the micros. Should I be using MNQH 2024? I assume so. I would double check with bar chart. So go to barchart.com, type in MNQH 2024, and then look at the volume on that one, and then go to MNQZ 2024 and make sure the volume is lower there. Do you practice moving stop to break even? I'll trim my stop. It depends on market structure at the time. It's not something that I'll do 100% of the time. But if I am taking multiple partials, like say I have 2 contracts on and I take a partial at 20 points, I'm going to move my stop to break even basically 100% of the time. That being said, if I'm looking at maybe a higher probability trade, but I'm expecting it to run maybe 40 points into market structure, so that means like up to this buy side, right? If I have my take profit at the buy side, which I could very well place it there, and we ran 20 points or 25 points, and we have 3 PD arrays, that should support price. So say in this leg here, we come up, and we have an order block that forms like this. We have 2 fair value ups that form as well. That's 3 PD arrays, right? So the 3 PD array rule is assuming your drawn liquidity is correct, you don't want to see 3 PD arrays, whatever it may be. It could be an order block, volume imbalance, bisi, fair value gap, anything like that. As soon as you have price above those, you don't want to see it close past 3 PD arrays. So in this case, like if price is trading up like this, we have 3 PD arrays, the order block, 2 fair value gaps, I'll be trailing my stops to the third one. Okay, that may be at break even. That could just be like, like 2 points out of break even. It doesn't really matter too much. But that's kind of the general rule I use. It's not just move to break even, take it at 20, things like that. I hope that makes sense. I think trading ICT concepts is more about market structure than it is about RR, or using, kind of strict risk management where you move to stop to break even. There's nothing wrong with that for sure. Like if that's what you want to do and it works for you, that's perfectly fine. He was saying 10, 10, 1150, all this confusing to me, which video I have to watch drive you crazy. All right, so typically macro time is between 9:50 and 10:10, right? And we're looking for an entry between there. On a Monday, so specifically on a Monday, I'm looking at around 10:10 for this delivery to be what you normally would see at 10 o'clock, if that makes sense. So 10 o'clock delivery, you either see a retracement or reversal, right? But since we're misaligned on a Monday, kind of push that back 10 minutes. So we either see a retracement or reversal at 10 o'clock, or 10:10, sorry. So 10:10, we got this retracement into a bisi. So I'd like to see it hold, and we just placed 20 points off of it. I am slightly late on the entry, so I guess you could drag this down like to 97.5. And you can see we're starting to displace upwards. So as we close above this range, watch this to be used as an order block here. Okay, this last down closing candle, watch that to be used. We do have a tiny volume bounce, so we may return. So the TP is at 16,400 is not it's not because of buy side liquidity. No, this is just a strict 20 points. So this is really the only thing that's strict for me is taking profit at 20, especially on this time of the year. But if you look at the hourly chart, the buy side's right there. So I mean, if you really wanted to, you could place it, another 5-10 points up. There's nothing wrong with that, but we'll just watch it for now. Obviously, this is a low probability trade, so I'm not expecting it to play out, but if it does, we'll screenshot it and add it to the books just to study these 10 o'clock movements. Can you show your settings for the kill zone and pivots indicator? I'll send a screenshot really quick. So with all of these indicators, make sure you're on GMT. If you're in the Eastern Standard Time or on the East Coast, make sure you're using GMT -5. That's your New York Standard Time right now. So very important for that. But here is my settings. You can go back into the stream recording. I'll send a screenshot too. That should be the main ones. Yeah, Nephew Sam, I'll send a screenshot of this as well. That's the first one. And then I actually have 2 layered on top of each other. Here's the second one. I do also have a video. Oh, let me send the template actually. I forgot how you do that now. Oh, it's up here, right? There we go. So if you want to just copy the template, you can use that. So came down, filled the volume balance right in there. You can see how choppy price action is, right? Very, very choppy. And bouncing up and down, not seeing any displacement out of the bisi. Not something you want to be sitting through. Once we close above this down closing range up here, so this order block, I'd move stop to probably these lows. So watch how we trade now. And trading back lower. I'm not really liking this at all, so we'll close it out before the stop is taken. But with how rough price action is, we're not respecting volume balance there. Trading back lower. Most likely going to take that low out. And there's the low. So, what, like tiny loss? We'll send a screenshot anyways of why you don't want to trade these kind of days, right? And displacing lower would have taken out the stop right there. So I'm glad I closed it out as I did. Just sending that into futures trades. So all the trades, if you're new here, all the trades taken on stream are sent into the futures trades chat, so you can look at those. And then macro review also has majority of the macros, unless I forget to screenshot it. Take these off now. So you can just be waiting for 10:30, right? 10:30, 10:45. Very boring price action though. Maybe that was the Judas. Yeah, it could be. Sweeping out stops right there. But you can see we're outside of time completely. Like this 10:18 is with, outside of two different macros. And if anything, you'd want to see a Judas up. Because this right here, we did technically take out sell stops, so that should start the buy program. I don't want to get too into it, but this dip lower would have taken the stop out anyways. Could move some of this stuff. But if you're looking at the daily, this high should definitely be the target, right? I don't think it will reverse here. There's no rejection block. We're tapping into 4 hour pretty clean. Daily wick is the only thing that would impede price. But yeah, that high definitely should be taken. Think about the weekly candle. If we come up, sweep out the high on a Monday, power of 3 would state, got the open, Monday, Judas, reversal on Tuesday, Monday, something like that. Display slower than we close. So that would be your standard weekly expansion candle. Look at the multiple time frames. Now we're holding this 5-minute order block. Just tapped into it, but opening range setup should still play out on a Monday. It'll also be very unclean. Opening range setup is where you have between 10:30 and 12, and you have a run for the AM high or the AM low. Most times you're already around equilibrium of the dealing range, so it's pretty easy to see what we're going to run for. If we fail to get below 957 low, I would assume that we're just going to chop around, maybe dump off slightly, and then go back for AM high and the buy side. So I guess these models and time zones can be applied to the Forex market as well. They can. The kill zones can. They are slightly different though. Like I believe the Forex market AM kill zone is between 8:30 and 11 instead of 9:30 to 12. I don't know about the macro times. Macro times might be slightly different as well. I'd assume this one is still the same because 10 a.m. is kind of a important time because you have news drivers at 10 a.m. Um, I don't think ICT has really said anything about macros on Forex. I could be wrong though. I would probably look it up and kind of just study it. Just look at these, the ones that are already given for indices. Make sure that they have the same kind of price action you see on Forex. But yeah, the concepts work, the time elements work, they're just slightly different. But typically you don't see really any price action past, what, like 12? Like on a classic buy a day, sell day template, you see low or high of the day formed in London. This is all for Forex. Lower high formed at London, and then the lower high formed between 10:30 and 12. So there really is no PM session for Forex. That's why the indices are slightly different on their time-based schedules. Is it not possible to reverse because we took out the high already on ES? It is possible. But look, I mean, look at ES price action though. This is the 1 minute chart. Really nothing in there. We're already what, like 10 points. Look how small that range is. Almost looks like Asian range. Let's look at the 15-minute. Really no difference. Asian 6 points. London. Look on a normal day. Asian small. London slightly bigger, and then large AM, right? Asian small, London smaller, or big, slightly bigger, and then so that's also something you can use. Definitely a very boring day. I'll say that. We do also have bond auctions at 1 p.m., 1:01 p.m. So if you decide to look at the PM session, make sure you have that marked out. It's right here. So you'll see a lot of volatility brought into the market right at 1:01. What does the time frame continuity indicator do? It's just, if you can see, it's right up here in this right-hand corner. It shows the expansion of the candles. So the daily candle right now is green, hourly candle is red, 15-minute is flipping red. So you can see. So typically when all three of these are lined up, it increases the chance that you're going to see a larger run. I don't use it as much as I used to, but it's kind of just nice to have on the screen, especially when you don't have multiple different screens that can access the different time frames. So like this one I only have two, right? On the other screen I have hourly chart pulled up, but it's nice to see just at every time what's going on. You can also customize this, put it to like 5 minutes, something like that. NQ forming the market maker X model setup in 30 seconds. I can't access the second charts on this, but and if you want to look at this as a market maker sell model, we are for the most part holding the bearish order blocks. We got this one I see we're holding right now. I'm watching this one now. Inefficient price delivery over here. See a bounce off this. These wicks don't count. You're gonna see candle buys within a gap. Definitely should see a bounce on this discount end. As you know, no one knows where the price could stop in the free value gap. I'm not sure if that's a question or not. So watch how we're respecting the order block for the most part. Tapped into it. But this is why you avoid Mondays. I may not just stream on Mondays because there's really nothing that happens that's worth learning. Same thing here. We're starting to see some CISD. Watch how this order block holds up on ES. Swept out London high. We've got gap in here, but past that, we should see speed below here. Not seeing any efficiencies. Solve this low. This should be high resistance though. So tap to the order block, starting to trade off of it. Go back to NQ. Approaching the element of time. So watch what happens between 10:30 and 10:45 now. I want to see a bounce off this gap. Actually, let me keep that on. This is the hourly gap. And bouncing off the bisi. So remember what I said before, in a gap, you want to see both clear buying and selling. Now, preferably that is with candle bodies. If you have numerous wicks, like 3 to 4 wicks, closing the entire range, that typically is considered efficient delivery, because in lower time frames, wicks are complete candle bodies, right? So you could use that to anticipate where price is expected to bounce in a market maker model, and you see those retracement legs off of unfilled gaps, off of order blocks, within discount, within premium, things like that. So best in the macros, you could know what happened in each one of them. I'm not understanding your question as much as I'd like to. I think what you're saying is how do we expect what fair value gaps to hold within the macro? That's dependent on the market structure. Oh, we have 2 order blocks up and down for value gaps. I don't know what we're expected to anticipate. I'm expecting downside, like I'm watching this sell side, but with how rough the market is today, it's not like clear to me. Trading all the way through. Here's 10:30. Waked off this order block as well. So we're really holding the bearish sentiment. Oh, could you know what happens in each macro? Yeah. So I'll send you if you take a look at the 950 stage and day, go to that chat. This is specifically for the 950 macro. And then look at the V5 that's posted. That's the PDF that I was referencing in the backtesting streams and things like that. That also has stuff about the 1030 macro in it, so you can use that to predict 1030 macro. And then 1050 macro typically have, if you click on that Q&A post that I just sent, that little blue bubble, click on that, and then the PDF is right above there. But yeah, that has data on 950, a lot of it on 950, some of it on 1030, and then 1050 a lot of times only plays out when there's a continuation. You don't really see a reversal at 11 o'clock as much. So here's 1030. If we can retrace back into the order block and then use that as a shorting opportunity, that would be preferred. Let's take a look at ES. Yes, same exact thing. We're filling this gap efficiently, right? So this wick doesn't count. Inefficient delivery there, but you can see both buying and selling all that worked up into it. And we're closing bearishly. So you'd like to see this low possibly taken out. Good 20 points from where we are. Put a tiny demo on there. This will be the last one for the day. But mean threshold stop. Take profit down the sell side. Short-term sell side right there too. This is a slightly higher probability. Something crazy. I mean, we could actually come and stop me out. But I'm using this as anticipating as inversion. We have pretty efficient delivery in there. But if I get stopped out, it's not out of the ordinary. I think we'll see AM low as well. I don't think. That being said, though, we do have these relative equal lows down here, and London low that was, slightly just ran through. Tap into the order block, and there's the stop out. Yeah. So another loss. Exactly why you don't want to trade these days. And we're trading up further. Upper portion of the bisi, a BPR. Right up here. I would consider it, like if you're looking at this, and then see how we traded up through it. And I mentioned I want to see previously how we want to respect this range. This filling of it, that's fine. 2 wicks all the way through. On lower time frames, this would be efficient delivery. We can see we basically just filled the entire gap, and now we're trading all the way back up into premium. But it's not something you want to be in. Let's take a look at ES actually. Yep, ES trading on through their order block as well. Another example of why you avoid Mondays. So hopefully that's clear to you. I'll take a screenshot of this one as well. Now watch, tomorrow we'll actually kill it, hopefully. Actually, is there news tomorrow? News at 8:30. Oh, we should be fine. Oh, there's CPI tomorrow too. That's probably why we're all chopping up and down. I didn't even notice that. So here's the other screenshot. So hopefully me taking these losses on stream shows you what not to do. Have you seen ICT's new execution vids? I have not. Did he just post them this morning? I saw he posted a picture of his house, or a video of his house, or something like that. Is he flexing before? Oh, yeah, I saw the most recent one, the NFP. I didn't watch the entire thing though. Is it worth watching? Okay, sweet. Yeah, I'll take a look today then. And trading back up into no specific point. So I think we'll probably call that a day, right? Unless you guys have more questions. If you have questions, just shoot me a DM. If you want backtesting data, same thing, shoot me a DM. If you don't have the 950 stage of delivery and day PDF, it is posted within the Q&A post. So if you scroll up in the prophecy chat, that 950 stage of delivery and day, or if you just go to Q&A and then go to, it's like the third one. There's a PDF in there. If you decide to trade macros, or if you're just looking at the morning session specifically, there's a lot of stuff in there that hopefully you can find great benefit in. Most likely we'll see you guys tomorrow, Lord willing, for another stream. Hopefully some better price action post CPI. As always, use proper risk management if you decide to trade the rest of the day. I'm not expecting anything crazy high probability, so I probably won't be looking at the charts too much. Stay safe. Good luck. Good trading. Stream recording will be posted later today. Yeah, see you guys tomorrow. Peace.